Welcome to The Explainer, where we break down the day's biggest stories. So let's get right into it.
All right, so after what felt like forever of just grinding sideways, the crypto market has just exploded. I mean, it shot straight up. And now everyone's asking the same thing. What in the world happens next?
And look, Bitcoin didn't just kind of creep up. Nope. It smashed right through some major resistance levels. We're talking a peak of over $116,000. It's pulled back a little since then, but wow, what a move. It literally changed the entire feel of the market in a single day.
And Bitcoin wasn't the only one having a party. Ethereum, you know how it's been stuck in that really frustrating tight range? Well, it finally broke out. It's now trading well above $4,500. And that tells you this isn't just a Bitcoin story. The whole market's feeling strong.
Okay, so with a move this big and this fast, you better believe the bulls are out celebrating. They're saying, hey, this isn't just some little bounce. They think this is the real deal, the start of a whole new leg up.
And here's the key takeaway from analysts like Blockchain Coco. The whole game has changed. They're basically saying, forget the old downtrend. It's over. So now when the price dips, that's not a reason to get scared. That's your buying opportunity. That's a signal to get in.
So for the bulls, the strategy is actually pretty straightforward. Step 1, they see the trend has confirmed its reversal. Step 2, they're watching for any little pullbacks, maybe down to that old resistance level around 114,000. And step 3, that's when they pounce. They use that dip to buy in, getting ready for the next move higher. It's buy the dip 101, but only because they're convinced the trend is on their side now.
And this isn't just hype. The bulls are pointing to some real data to back this up. First off, you've got this classic technical pattern, a head and shoulders bottom, which is a huge signal for a reversal. Then you look at the on-chain data. The whales, the big money players, they just made their biggest purchase in weeks. And on top of that, the Bitcoin ETFs just had a massive inflow of cash. So with all that firepower, they're looking ahead targeting that $119,000 to $120,000 zone next.
But just when you think it's all clear skies ahead, there's a whole other group of analysts, and they're basically screaming, hold on a minute.
They're looking at this same move and seeing something completely different. They're saying this isn't a new bull run. It's just a really strong bounce inside of a bigger downtrend. For them, the macro picture is still pretty shaky. You've got folks like Trader Change who are not changing their minds. Their long-term view is still bearish. And to them, this big price surge is actually a gift. It's the perfect opportunity to sell or even short the market at a much better price. And why are they so cautious? Well, analysts like Bitcoin teacher Mia are pointing out that the price isn't just heading into open space, it's flying straight into what they call a wall of resistance. It's not just one level either. You've got a key Fibonacci level at 116K, the top of the price channel right around there, and then another big one just above at 117,900. That is a ton of selling pressure to get through.
And the bears say if you look closer, this rally is kind of running on fumes. See, the price is going up, but the trading volume is going down. That's a big red flag. It suggests there isn't a lot of real conviction here. Plus, you have momentum indicators showing something called bearish divergence. That's a fancy way of saying that even as the price makes a new high, the actual strength behind the move is getting weaker. It's like the engine is sputtering just as it's about to hit that wall.
Okay, so we've got two completely opposite stories here, both pretty convincing. Let's really dig into the hard data and see what's actually going on.
All right, let's go back to those ETF inflows. I mean, look at this chart. We're not just talking about a little bump. The average was under 200 million and then, over 740 million in one day. You can't argue with that. That is some serious institutional money coming back into the game.
But maybe the biggest piece of evidence for the bulls, it actually comes from Ethereum. A signal just flashed that is so rare it's only happened twice before. Ever.
So here's what's happening. The amount of ETH just sitting on exchanges ready to be sold has dropped to an all-time low. When this happens, it means people are pulling their coins off to hold them for the long term. They're not looking to sell. The first time we saw this was in 2020, right before a 1,400% rally. The second time? At the very bottom of the 2022 bear market, and a 360% rally followed. And now, that same signal is flashing for only the third time in history. That's a pretty big deal.
So that's where we are. The market is stuck in this tug-of-war between two very powerful but totally opposite stories. It really is the classic dilemma for any investor right now.
So let's break it down one last time. The bull case. The trend is flipped. The big money, the whales, the institutions, they're all buying. And you have that incredibly rare, historically bullish signal flashing. Then you have the bear case.
This is just a rebound into a brick wall of resistance. The rally doesn't have the volume, the momentum is dying, and the bigger picture is still weak.
Both sides have laid out their arguments, and honestly, both have some pretty strong evidence. One side sees a rocket ship on the launch pad. The other sees a car about to hit a brick wall. The arguments are in, and now we just have to wait and see which story the market believes.